What's up, guys? All right, today I'm going to break down basically my entire thought process, preparing a play, executing a play, and then how to play gaps. Today, SPY gapped overnight, and I feel like majority of the younger, you know, not younger, but less experienced traders took those calls right on open, and it ended up absolutely destroying some portfolios out there, losing 10–20% in a matter of seconds. So that's something big. So I want to go over kind of how I played them. There's not exactly a 100% way to play them, right? But going over how I play them to help you better understand that. But basically, I'm just going to walk through my entire process from first making the watch list, finding these plays, to key levels, break down Adam Sliver's 20–25% method, and then go through execution of a play. Something that's really helped me, is go back over these plays, look where I messed up, where I can improve, and try to improve the next day. I see that same pattern again. It's something that I think more about, right? I know how to play that based off going back, looking through, and you think about it a lot more when you have the time to think, right? As a day trader, you want to make those plays right away. It's just instinct, emotion, to get those out of the way, get those going. But when we take our time and think, we can think more logically. That's something that's really important to do as we trade and also evaluating our trades. So the first thing I do in order to make a watch list, I always go down very first thing, hot chains and tickers, right? When we click on this, there's going to be, I'll just go through it. So hot chains and tickers, I'm going to hide these index and ETF. And I'm going to use the first 2 pages of this, the first 100 tickers, right? Because as a day trader, we want options that have a lot of volume. It allows us to go in and out a lot easier than a ticker that has, not much volume. They could be a spread and you could get a big loss easy. No one willing to fill it, right? So that's something that's really, really important there. And then I just glance through it first and look for anything that's a little bit different. And that's what actually happened with TSM. So yesterday, I was going through this normally, just scrolling, looking for some plays, looking for some things that really stuck out. And TSM was the first one to grab my attention. The reason behind this is usually TSM has, about 25 to 40,000 in call volume. Yesterday, December 15th, there's 175,000 calls placed. This could be shorting as well, a little bit different scenario. But anyways, we still have this really good volume, almost 3 to 6 times as much as normal. So that really, really stuck out to me. So I looked at it a little bit better, and then went through some flow. The flow won't pull up because it is a day after, and it's gone. But once I did that, the next thing I'm going to do is I'm going to look for our key levels, right? So the first thing I do here is I go to the daily. On the daily, I want to know what's going on. Are we near support? Are we near resistance? What's happening? The first thing I notice here is we're in this big consolidation phase from late February of last year until now. I'm trading from about 107 up to 125, stuck in that little area. But I also know in the short term, we have this descending wedge right here, almost perfectly, just you could draw a line, chop it right down. That's something I also want. This candle's not here. We're going to ignore that. So yesterday, my thinking, right? I know this big bullish candle, right? So how I find key levels, that's the first thing, break down the daily just to see some sentiment, stuff like that. I don't usually place levels immediately unless they're all-time highs, just solely based off of a daily chart. But one thing I do want to really explain is Adam Sliver's method, the 20 to 25% method for finding key levels, right? So what I do is I use this candle from wick to wick, from top to bottom. What's the daily range? On this candle, we have a high of 120.5, a low of 116.48. So we have about a $5 move. So what we're going to do, we're going to calculate that real quick, $5. We're going to do 20%. So that's about $1 on each side, it is $1 on each side, give or take a couple decimals here in this case. So our triggers initially, before I even look at this hourly chart, I know that I want to be about $1 on each side of the finish point. So yesterday it finished at, let's see, what did it close at yesterday? 120.42. So dang near the high. So I know I'm going to want to look at zones over that I can get and that could give us a big move. So the first one that sticks out to me, right, is this 120.8. Hits here once, not twice. Well, I guess twice. It's also support here, resistance here. I forgot this is today. So when I noticed that was my initial call trigger on this. Because after that, we have this move up here to about 121. Very high volume with this profile we see here. So I like that. And then on the downside, there's a lot of different things we can see here, right? We notice that this area here about 119.35 to about 119.5 is a very big area. We can also see this with the POC. So I'm going to break down a little bit further to the 15. Alright, so what I see here, right? Holy shit, that's slow. Alright, so what I see here, I see this 119.4 put level, yeah? And I see this 120.8 call level. These are the two levels I have set. I tweeted them out. But the reason I chose this 119.4 as a put level is simply because right here it acts as a pretty big resistance, and then we get this big downsell. On the contrary, yesterday we have these two candles here with a double bottom right around that 119.4. So underneath here we can get this drop to about the VWAP here at 118. That's a $1.40 move. I would watch this first, about 118.7, but that's still a 70-cent move. We can do pretty good after that. On the upside, 118, and we have that move up here to about 121.5. Which is also a good move. Then the real thing that kind of stuck out to me today was gaps. SPY gapped overnight, so that was something. I'm just gonna do this to refresh, get it back right. So I'm gonna go over kind of how I executed it, how I thought through this play, and really go through that. Another very important thing with call triggers, psych levels are often very good trigger points, right? So we want the 0.0s, the 0.5s, and then big ones are the 0.25, the 0.5, 0.75, and then whole numbers. So I like to use those. So when looking at that 20 to 25%, I'm gonna go about $1 down. It finished at what, 120.42, so about $1 down, 119.4. Good, I like that. I like that a lot. On the upside, it's a little bit under, about 50-ish cents. So I don't like that as much. But over that 120.8, we had a big move to 121. So that's where we can kind of fine tune it a little bit to fit. And then when it comes to execution, so my thing here, SPY gapped, right? When I'm playing gaps, if something is gapping up, I want to wait for a retest. Right here, a retest of the call level. So right here, our call level was 119.4. And we see here, this was denied at the 120.8 original call level. And it fell. We get this big candle here. This you could play calls off of. Could have made a little bit of money, not as good as if we play puts as we see, but I'm not going to trade in these first 15 to 30 minutes when there's a big gap up like that, just because as a bear, you have little risk trying to short there, and if you do win, the reward is much greater than the risk. So what's the point in not trying it, right? Especially with something like SPY that was near all-time highs. It respects support and resistance pretty well, so that was something I really liked a lot. But where I got into the interest in this play is this right here. So we have this breakdown here. It goes below, but the next candle closes below our original call level. So I flip to puts. And then this next candle even confirms it hits it, but it can't cross over the 119.4. I'm entered here full position. I didn't expect to move that fast into the position, but we had this double retest right away. Both closed underneath the 119.4. So that gave me a really good idea as to this level is going to be a resistance now. So the next thing, we have these couple times that are a little bit slower. I'm holding full position here. I initially scaled at this big candle here because I want to sell these rips, right? And I also, if you look over to the left, we have this area about 118.25 that does have some support. And if we look again today, we have this here, right? And then it keeps going down. And then I scaled 2/3 of my position here. Because this was our original support, it's also a VWAP support here at this 117 area. So I'm 2/3. I'm fully, I just have runners left, right? They can do whatever they want. I have my stop loss set about right here. It was at this point, it's over 100% runner. So I'm fine. I think I did set it at exactly 100%. Just, get some money out of it. Might as well play it while it's down. And then I still have the runner playing today because of how big this candle is. But I moved my stop down to about right here, about this 117 area, into close, just because tomorrow, if it does gap up, I could not make as much money. And I think that's something, that's just a little bit of greed, but also that I have profits in it. So I'm okay with them getting stopped out here about 117. That's fine with me. So what really important here as well is with these gap ups, a better way to play them would to be wait, we get this retest here, this initial retest. We get a second retest, but this is it's a bullish engulfing candle, and it almost closes below the zone, right? Or below our original call trigger. So I'm not going to enter on that one. I'm going to wait for this next candle, see what we have. If we had a hammer candle here, a green hammer here, I would have entered calls. They could have reversed, that's okay. But instead we get these very bearish candles here, break underneath our call zone, which we flip then to a put. And then we have this long candle here, closes under again. So I'm fully confident in this. We get these bounces back up. That's okay. I have my stop loss set right when I go into the play. I always set my stop loss 10%. That's just something I've done since my account was $50 and I was trading beer money. So that's something that's just been part of my plan ever since then. And I've really grown to like that. So that's something right away. I set that 10% stop loss and I just let it go. SPY was tanking, so I had no real reason, and it's way below our VWAP. It got denied up here at VWAP and couldn't hold the 119.4 original call trigger. So we're going down. I'm fine with that. And then the next big thing I was worried about here was this VWAP based off of our POC, which is down here at about 116.75. So I scaled here. I'm about a third, 2/3 out. The first third was actually here on this big candle because I wanted to sell into the dip and make more off of it, right? So then my second scale out here, and we have a runner. I've a couple options puts still running, but they're weighing the money, so that's something we can really key on. But the big thing, is playing the gaps. If we were to flip this around, right? And this is a gap down. On a gap down, I want to say we'll use this over here. Say this is a gap down, right? It's coming up, and this is our put trigger. If it gets denied by our put trigger, like it does here, I would enter puts right here and hopefully fall down. In the case that it does come up, and this hammer candle here with the close above our original put trigger, I'm going to play calls. Just because all my call and put triggers are simply pivotal points that could lead to a big move. So off of these, we can play both calls and puts, failed both sides, which makes it really cool. And that's the really cool thing about playing options, which make it different from smaller caps and stuff like that, and really give us an advantage in the market. But that's basically my thought process on this. Another thing, if you do use VPA, I'm a big fan of it personally. These profiles here were much less, right? But they were huge down here about this, this POC at 116.8 earlier. So I knew this move could be fast. It wasn't as fast as, the Microsofts, the Apples today, but it did pay really, really well. So using VPA is big there. And you can kind of tell right where we should scale out and how big of a move potential was there. So that's something to keep in mind as well. But yeah, basically, that's my thought process on it. Going through from when I look at plays every single day. I'm always looking at the plays. On the daily chart, I want to see if it's at a possible support or resistance. If it breaks through that support, right, we could get a big move down, or it bounces off, we get a big move up. If it's at the resistance, it could, hit it, tank down, we get a play down. If it breaks through, we get a breakout, and we get a play to the upside. So I want to look for plays that are always up and down capable, no matter what. Another big thing mentally going into this, we had this big day yesterday, ended very bullish, big bullish candle on SPY. So that's cool, right? But oftentimes when people get overconfident, it goes the opposite way. And that's what happened today. We got people overconfident playing into these here, and the shorts get them good, to say the least. So that's something that we want to take emotions out. No matter how bullish we feel or anything, we want to play the price action. That is a big thing that it took me a long time to learn. I was pretty invested, in the emotional attachment to some stocks, and it kicked my ass. So that's something that we can take out by simplifying our overall system, and also by just trading the simple price action, being able to play both puts and calls. That's about it, but let's get it tomorrow. It's going to be a little bit choppy with quad witching, so we're going to look for some good plays, but I'm going to get in and out of profits quick tomorrow, more on the defensive side, set that stop loss and let the runners run.